Hey everyone, welcome back, and thank you all so much for taking the time to join me in this quick discussion about our favorite company, GameStop. Quite the weekend we had, a lot of discussion, and I'm sure learning about the special dividend warrants, with, of course, an ex dividend date of October 3rd, only 14 trading days away, and a distribution date of October 7th, which is like literally the next week. So things are moving very, very quickly. Of course, if your broker does not support the warrant, if you have not initiated that transfer, this is your last opportunity as far as I'm concerned. It does take a week or two, and that's really all we have left. So I hope you listened to everyone who was recommending that. If not, buckle up. My best wishes to you. Good luck. um, and then, we're going to talk about within today's video some options overview. We've got some information there within the chain. It's been split. We kind of talked about that in the last video, but discussing the implications of that a little bit more today, and going through the daily flow as well. Right, there's lots of strikes being added here. Intra-week, and we like to track that as well. It kind of looks like we've got a little bit of a ramp building, if I may say so myself. We also have new FTD data, so this is fairly relevant because the due date on these failures is aligning right with the distribution date of the warrant. So we also mentioned layering liquidity stress on the short side of the trade, and this is one of those layers, which is nice to see. And when we do stress the other side of the trade, we see things like the lender of last resort trigger. This is the standard repo facility, borrowing 1.5 billion, this morning. So we're just going to talk a little bit about that today. What's it mean for us? And then we also have some tinfoil to go through, which is pretty exciting. And of course, we'll wrap up with our daily technical analysis to close out the video, as we are up 2.5% today. Nothing crazy, but what we are doing is holding a very, very nice trend, which is cool. So more on that as we get into everything here. So first things first, let's get into our options data here. And just a quick recap, going through everything. September 19th here has a max pain of 2350. The skew is calls for the open interest piled around 24 to 26, with big prints at 25 and 26, right? Massive volume here. And the pin risk remains 24 to 25, right? Obviously, they don't want all of this in the money. That would indicate some pain on their end. However, with positive momentum, you never know how things go. So over 26 is going to invite hedge buys. Under 24, the puts are going to be thin, and the weaker downside pin could take place. September 26th, we have max pain at 24. The skew here will be fresh call flow between 24 and 26, with pops at 30, which is pretty interesting. The read on this, I guess, is if we hold greater than 26, right, then we can watch for a build to 30 for a potential hedge chase risk, as this may not be fully, processed yet, right? We are below 26, and maybe that's not been fully hedged. So if we do get up above it, there's a good chance that we can swing towards the next, which would be that 30, right? So moving on to October 3rd here, which is the record date week, right? Where you'll need to own your shares if you would like the dividend that they are owed. And max pain's at 23, the skews, 25 and 30. The early exercise window for in the money calls to capture the warrants potentially, to look for the in the money 25 and 26 open interest to drop without, really a corresponding retracement in price, right? So if everything holds steady, but the open interest here drops, well, maybe it's an early exercise on these contracts. And then, we have share settlements, so forth. Moving forward, October 10th, post distribution here, max pain 2350, our skews 25, 26, with that 30 node remaining, right? It's kind of a commonality between the different expiries. If we can get over 26, 27, 30 does become a realistic short-term squeeze target, as we may not necessarily hold that level, but we're above the gap on the 1 day at that point, the big one, and then we have that secondary gap to clear as well, at which point, it gets a little flippy on the hedge potentially, and, who knows, at that point things do get really weird, and there's that final gap to 3360, but more technical analysis later. Just to kind of showcase how the call chain lines up with the daily gaps that we have, right? Because people are targeting those gaps to be filled, and that's why I think we see a lot of open interest at those specific strikes, right? Moving forward to the 17th. Now this is like quarterly expirations, right? The OPEX. Max pain 23. The put call ratio is 0.33, which is extremely bullish, and the skew is going to be a large wall at 30, right? Like, look at this thing, that is 42.5. So, they have all the incentive in the world to pin us underneath this, of course, right? Like, quite a bit. We got secondary walls at 24, 25, light tails. On the backside at 35 and 40. So, sustained, if we can hold over 28, 29, it's going to put $30 in play for sure. If we can close and stay above 30, we're going to have meaningful incremental hedging after that on top of it. So, that potentially would be best case scenario. However, let's keep in mind that a lot of these, unless we see price improvement, there's a good chance that a lot of these 30s were bought pre-warrant, not pre-warrant, pre-bond dilution before we dropped from 30 to 24 or something, right? So many of them could be very under the water, and even if bought after that bond drop to 23, there's been a lot of time. It's been 3 months, So the theta has bled off of these substantially, and probably a lot of them are dead in the water. Many of them could have just been used as a hedge and were meant to expire worthless to begin with, right? As many options are, of course. So, yeah, we don't mind that. What to watch? 25 to 26 is going to be pivotal. If we can hold above, then they're going to have to hedge buys, repeated fades, pin attempts towards 23, 24. If we don't get it, right? If things do break down, we've got a wall at 30. Through September 26th to October 17th. Now till then, basically. We're just going to track volume on the open interest here, and if we can get a clean break and hold above 30, maybe the positioning flips against us, because that does happen sometimes. But we're gonna wait and watch to see how that all unfolds. And this might not necessarily just be like, that's just looking at the option data, and that's just one layer of this, right? But we have additional layers. The warrant settlement, for example, or scarcity, I should say, is one of them. The interest rate coming out soon is another. So it's just really about adding these together. So even though currently the options chain kind of looks like there's not a lot of room past 30 to get us to 40 to 50 and 60, and it dies off, and that's going to be a really easy spot for the market maker to kind of flip the hedge downwards. That's not to say that another catalyst doesn't come out to warrant a new floor, and the chain now rolls forward potentially up and out, and then we can continue the ramp, right? That is all very much something that we're looking for day to day. In the money, open interest 25.26 into October 3rd. If we see that falling and the price stays firm, that means people are early exercising, and this is going to cause share settlement and net buys, right? Just, of course, tracking the IV as well. Call stuff for Jan 2026 makes surface vega very sensitive, and IV run up with price run up could be very nice for those, but again, nothing that I'd like to play. If you are playing these leaps, you've got to be in the money as far as I'm concerned. January. I would not want to play these 120s. These 30s, I probably honestly am not a big fan of either. However, because this is kind of the top of the ramp, as you can see, it really dies off. It's not like we have, massive 34 up here as well, and it's not continuing to grow. So it kind of dies off there, right? And it's so it may be hard to continue. However, this is all subject to change, right? And it can very well develop out as we continue to monitor it, right? So, the 120s are going to be super sensitive to the IV, but I don't necessarily think that's your best play. If you want to take a couple lottos, whatever. I don't personally like it. If we are going to squeeze, there's safer ways to capture that move than these 0% chance plays. But if you want to throw in $50, whatever, it's totally 100% lotto, lost money. You're throwing it into the fire. But maybe a Phoenix comes out. Who knows? Sorry, I don't want to be rambling too much. Let's move on. This is kind of the options chain. Again, just watching it develop. We have failure to deliver data out, which is pretty interesting. There's nothing too substantial here. The only important part is that there are failures, and the closeout T plus 35 is going to kind of be within that late September, early October, which is the record and distribution week, right? So as long as the longs hoard shares and the warrants, the lendable float's going to tighten, which is an elevated buy-in risk, which is exactly when they want to be pinning it to 23 and 24, which is going to make it harder on them to do, right? And then the lender of last resort triggered today, I guess. It's worth mentioning. And so what it is the standing repo facility. It's a macro funding backstop, overnight cash versus treasury agencies for banks and primary dealers. So treat it like the spikes as context. So they become interesting really only when we can pair them with other things, right? So it's we want confluence within this. We need multiple things lining up to even relate it to GameStop, I think, as far as I'm concerned. So it's to just have it spike could be anything, anything in the whole market. So that's, kind of hard to necessarily say, oh, that's about me, right? But however, if, we have borrow stress, cost to borrow jumps, utility goes up, right? Maybe we have options tilt, a whole bunch of fresh contracts, 25s, 26s, 30s, building within that open interest. Something like this, price or volume, right? If we have high relative volume or price movement, right? Or if it's within a distribution window, like a T35 of OPEX, something like this, right? Where we expect to see something happening. There's probably more, right? Just as an example of things that we could look for. But if it's just a print with the 1.5 without any additional context or relation and multitudes of, it's probably just noise. However, if someone's super duper smart and knows the ins or outs, I may not. So they could enlighten me on that. However, not necessarily seeing a lot of those things today, right? On my end, the cost to borrow, 0.52, shares lendable remains there. Of course, we are watching for this to climb into that distribution date and the record date as well, right? So it's not interesting. It is what it is. We have our failure. We have our options chain. And yeah, borrow rates is kind of still chilling. The share pool is still chilling. And the utilization is up a little bit. But, we always expect utilization to be up post earnings. There's a lot of people taking advantage of that IV crush, if you will. So we see short volume spike, which means people are borrowing shares, and utilization goes up, and I get to be expected, right? Then we've got some tinfoil, right, to go through a little bit before our technical analysis. So we have the two Reddit profiles, right? We have deep fucking value, the normal OG profile, right? And then we have this obscure Roaring Kitty profile from 10 years ago with a stock post, which is what would be the odds, right? They're logging in for one day, logging out. Logging in for one day, logging out. Breaking a one-day lock-in streak. Essentially, it's so far what we see. And I just can't help but think of the signs meme where there's like, oh, there's two of them, they're talking to each other, right? They got the walkie-talkie, So there's some tinfoil, right? And then we have UBS with the U.S. bank merger rumors, right? We have potentially, these UBS swaps or bags being unwound. And then at the same time, UBS wants to move to America to dodge regulations, as well as Trump now proposing 6-month quarterly, 6-month reporting on financials instead of quarterly. So it's like, here's an extra 3 months to hide the shenanigans, right? To pass the bags along or whatever it happens to be, right? But now, I get your company and you got to take on these banks or whatever. I'm sure it's art of the deal. But coincidental. So definitely we've got the tinfoil on for that, right? Yeah, so, obviously just entertainment within those subjects, of course, but just things that we've seen today that are quite coincidental. So aside from that, finally, something I actually know what I'm talking about here is the technical analysis. Always comfortable with this. Doing our day trades for 5-6 years now. Just started to record a lot of them on the channel. They're in their own video because I know a lot of people don't want to mix the two. But if you're interested in learning technical setups, risk management, the whole 9 yards, what's moving, why it's moving, how we're playing it, I try to break it all down just as a daily diary so I can help improve my future trades, right? It's a way for me to sit down and do that daily review. Because if I don't make a video, I won't do it. I'll just, go on to the next day. And then it's a little bit harder to improve and learn upon yourself. So, of course, that is available for you. And, let's break it down. So, up 2.5% on the day. Of course, there's no volume. It's just dry as a bone, which kind of makes it hard to trade intraday. You hear the meme, whale teeth for MOAS. Well, this is it. So, just low liquidity. No volume here. We have our 30-day average volume at 8.2 million. That can't be right. That cannot be right. It's not. Current day volume at 9.6 million. So getting up over our average. And if we kind of zoom in here, right, we can see our average decreasing. And then we do start increasing. So that's nice to see. But I'll tell you what, 10 million volume is not going to do it. We need a minimum of 20 to even pay attention. But preferably 80 to 100, and who knows where we'll get to in future days. But when we're at that level of volume, that's when you're paying attention, and that's really how one should pay attention to GameStop, in my opinion, because of like the the variation in liquidity, like it just doesn't trade. How do you watch it trade sideways for 3 months, right? You go crazy. and but if you tracked volume, right, you have a volume alarm, okay, today's high volume, what's going on here? Relative volume at 4 or 5, something like this. And it makes it much easier to track and to know when to look at it if you didn't want to just stare at the paint dry every day, which, I mean, personally, I love, but some people like to go live a life as well. And just pay attention to the volume. When we get, over 20 million volume, 50 million up to 100, then, it's time to maybe be sitting down, getting a grasp of everything, and ready to act potentially. So the volume is not here, right? Very, very little volume. And but we're trending up on low volume, which is a very nice sign. Holding 25 as well, I think is super important. We talked about this bearish breaker block on the 1 day invalidating. It was a bearish order block invalidating, turning into a bullish breaker block, pardon me. And basically just resistance turning into support, in layman's terms, right? How that's calculated on the backside is a little bit more in depth, but we have that now in line with the daily 200 EMA, with also our daily gap lower band, which is 3 things that all scream support. Plus, we add our options data. We have a lot of 25s acting as support as well, right? Even some 24s and stuff. So it's not just like, oh, you below 25 and now you'll never get above it, because there's so much else holding it up as well. That's great. We have our 1-day reversal signal about to set. This is going to set tomorrow morning, I'm certain of it, unless something terrible happens. And, that's basically how I trade, is my 21 and my 50 exponential moving averages. I love to just play off the reversals. So here's our last bullish reversal. It did come down after that, but just into a trend retest, and then we shred upwards, right? And the time before that, no trend retest here. Well, it does here, but it's already shredded upwards, right? So, and then I guess the time before, which is a little bit different because that's got Kitty's return, but we'll have to wait and see. So it's substantial, right? It's something that is going to, if it sets, because it could be false rejection, but again, we have so much support, right? So if it sets, we could potentially look for a trend retest, and ideally we hold the 25, we hold the 200, and then these the 50 and the 21 are going to catch up, real quick. In a couple of days, they're going to be caught up to the 200, at which point now I'm comfortable with a trend retest to those EMAs, because they basically just caught up to the price is what's happening while we trade sideways here. Then the reversal sets, it confirms, and then we can go on, a month run, a 2-month run, a 10-year run, right? No, I'm just kidding. But an extended run, which is awesome, specifically when we, again, start to layer all of these things where, okay, the options chain is bullish. We are coming into this dividend, which is bullish. We have the interest rate coming, which is bullish. Plus, we're setting a meaningful reversal on the day, which is bullish. So, it's just stacking those things in our favor, which I love to see. Aside from that, maybe let's break it down on the 4-hour. Doing this all in real time, I don't really plan any of it, but here's that trend retest 1. Here's that trend retest 2. So I'd love to see this 21 EMA on the 4-hour continue to hold. That would be awesome. But if not, as long as we do hold the lower band and those other levels that we talked about, I'll be happy there as well. But as far as being really aggressive on the trend, this is the one. This is the one that I personally, I guess, I'm watching. Upside goals, immediately to fill the gap. Like if you have options due soon, I specifically have a lot of October 17s coming due. I'm going to look at reducing my risk, scaling out some of those. If they're in the money, we can exercise them. But at the fill of the gap at 28, I'm going to be looking at my position, assessing it, trying to reduce risk, lock in some profits, while still hopefully maintaining some exposure, right? More on that as we do get there, of course. And yeah, to look at it on the 1 hour is kind of messy. It's more of the same, but instead of the 21, we're now using the 50 instead. But again, it's just the same story. I don't really have that much. It's kind of boring, right? And day by day, that's how things go, right? Where this is what we'd like to see hold. This is where we could potentially go, and we monitor, right? We check in, right? See how things go. Is it working out? Has our setup been invalidated? Do we need to reassess? All while managing our risk, which we don't really do in GameStop. Oh man, there's no risk management in GameStop. People just buy and hold. Typically, you set a stop loss. You always 100% set a stop loss unless you trade GameStop, which you should still do, right? So if I was a technical trader, I'd be waiting for the reversal signal. I'd try to get an entry in on the trend retest with a stop loss below my order block. But that's a little bit different. That's much more technical. I don't expect anyone to be day trading GameStop. It's a buy and hold stock. If you want to be swinging it long terms, high to lows, that's fine. Personally, I'm doing a lot of options plays for that. Just hoarding shares and trying to accumulate them. Of course, bleeding off along the way if we do have any major runs, and then scaling back in on the dips. Just trying to be as effective as I can with the volatility that's given, so I can accumulate the largest position possible. Right? We love GameStop shares. So, if there's anything that you guys want worked in to my technical analysis videos, I always just use the specific indicators I use to trade because I'm super comfortable with them. But of course, we could break down others. I know Kitty's got the MACD, he's got the PMO, he's even comparing GameStop to SPY relative strength, which is all fine and dandy. I don't mind those. We can definitely begin to break down those in the future as well, add them to the chart. Maybe I'll have one chart with Kitty indicators and one chart with mine. I think that's actually what we'll do going forward. And if there's anything I've missed, you want to incorporate into the workflow, any improvements I can make at all, please don't hesitate. I'd love your feedback. And of course, thank you all so much for the support. It's been fantastic. I hope you all have a great week, and I'll see you soon in the next. Take care.